Hello, Warren and Charlie. It is great to see you both and the wonderful Berkshire managers. Our thanks for everything that you do. My name is Rajiv Agarwal, and I am from New Jersey. My question is on market timing. You have always said that it is impossible to time the markets. Yet, if we look at your track record, you have had amazing timings with some of your key decisions. You got out of the stock markets in 1969-70. You got back in 72, 72, 74 when the markets were really cheap. You did the same thing in 87, 99, 2000. And today, we are sitting on a significant amount of cash when the markets are going down. My question is, how do you time the big market moves so well?
We'd like to offer you a job first.
I will take it.
The interesting thing is, obviously, we haven't the faintest idea what the stock market is going to do when it opens on Monday. We never have had. We have never made, Charlie and I don't think, in all the time we've worked together, and I'll tell you something later on maybe about how learning takes place, but we have never, I don't think we've ever made a decision that where either one of us has either said or been thinking we should buy or sell based on what the market is going to do.
No.
Or for that matter, on what the economy is going to do. We don't know. And the interesting thing is, sometimes I get some credit someplace for the fact that, how wonderful it was that we were optimistic in 2008 and when everybody was down on stocks and all that sort of thing. We spent a big percentage of our net worth at a very dumb time. and I shouldn't say we, it's I. We spent about $15 or $16 billion, which was a lot bigger to us then than it is now. We spent it in the last few weeks. There was a period of 3 or 4 weeks between Wrigley and Goldman Sachs and General. At a terrible time, as it turned out. I mean, I didn't know whether it was going to be a good time or a bad time, but it was a really dumb time. And I wrote an article for the New York Times and Buy America and all these things. Well, if I'd had any sense of timing and waited 6 months until, I think the low was in March, and in fact, I think I was on CNBC maybe that day or something, but I totally missed that opportunity. I totally missed, in March of 2020. We have not been good at timing. We have been reasonably good at figuring out when we were getting enough for our money, and we had no idea when we bought anything. Well, we always hoped it would go down for a while so we could buy more, and we hoped even after we were done buying and ran out of money that if it was cheap, the company would keep buying, and in fact taking our interest up. I mean, that's stuff you could learn it in 4th grade, but it's not what's taught in school. And I mean, so never give us any credit. Well, actually, give us all the credit. I mean, go out and tell everybody how smart we are, but we aren't. We haven't ever timed anything. We've never figured out insights into the economy. I mean, when I was 11 years old, March 12th, I guess, 1942, March 11th, I bought stock when the Dow was 90, well, it was 101 in the morning. It was 99 at the end of the day, I think. And, now it's 34,000, or maybe it's 1,000 less than it was on Thursday. But I just, it's one decision. And this is really important to understand. In the last couple of years, stock market is probably, it's always been a combination of a casino and when I talk about Wall Street, I'm talking about the whole capital formation market, but and trading market, et cetera. But the market has been extraordinary. Sometimes it's quite investment oriented, kind of like it always you read about in the books and everything, what capital markets are supposed to do, and you study it in school and all that. And other times it's almost totally a casino, and it's a gambling parlor, and that existed to an extraordinary degree in the last couple of years, encouraged by Wall Street, because the money is in turning over stocks. I mean, people say how wonderful you've done if you bought Berkshire in 1965 or something and held it, but your broker would have starved to death. I mean, it's Wall Street makes money on one way or another, catching the crumbs that fall off a table of capitalism and an incredible economy that nobody could have ever dreamed of a couple hundred years ago, but that they don't make money unless people do things, and that they get a piece of them, and and they make a lot more money when people are gambling than when they're investing. I mean, it's much better to have somebody that's going to trade 20 times a day and get all excited about it, just like pulling the handle on a slot machine. That's who you may not say that you'd want that person. You'd like the other kind of person too, maybe, but that's where you make the money. And the degree to which the market got dominated by that is shown on a slide I have here somewhere. Just tell me about one that hasn't been, but tell me later when the crowd isn't listening. That's where.
But look what happened to Robinhood, from its peak to its trough. Wasn't that pretty obvious that something like that was going to happen?
Tell me again what it should
have been. Robinhood, when it came out and it went public and it got lured everybody in all the short-term gambling and big commissions and hidden kickbacks and so on and so on. It was disgusting.
Yeah. And it says the last year, and they got mad at you, and they sold a bunch of their stock, and they got the money. And
yeah, but now it's unraveling.
Yeah.
God is getting just.
But a lot of the insiders have they've gotten a lot of money from it. I mean, they were big sellers, as I remember.
That may be, but
yeah,
there's been some justice.
Well, I have to agree with that. Well, it's a good idea to go around making enemies of people, though. That's another question, which we do. Is it wise to criticize people at all?
Probably not, but I can't help it.
Yeah, well.
Well, those are good questions, and there's no question about the fact that the government of China has worried the investors from the United States who invest in China more in recent months and years than he did in earlier periods. So there's been some tension, and it's affected the prices of some of the Chinese stocks, particularly internet stocks. Just in the last day or two, the Chinese leader has sort of reversed course on that and said he went too far and he's going to pull way back and so on and so on. So we're having some hopeful signs. But yes, there are more difficulties of dealing with the regime in China than there are in the United States. And it's different. It's a long way away, and they've got their own culture and their own loyalties and so on and so on. And the reason that I invested in China is I could get so much better companies at so much lower prices, and I was willing to take a little political risk to get into the better companies at the lower prices. Other people might reach the opposite conclusion, and everybody is more worried about China now than they were 2 or 3 years ago. So that's just the way it is.
I have nothing to add. Yeah, and of course, bonds can swindle the equity investor too. Everything, inflation, I should say, swindles the bond investor too, and it swindles the person who keeps their cash under their mattress. It swindles almost everybody, and the problem, if you have a business that doesn't take any capital, and let's just say the dollar depreciates 90% or something, so things cost 10 times as much. If it doesn't take any capital, you can charge 10 times as much, and you've kept your relative position. But most businesses take some capital. If our utility business, if just say that the dollar is worth 1/10, some years hence from now, we have to have 10 times the capital investment, basically. And we get paid a return on that. But we have forced capital investment to essentially keep them in the same place. And I wrote an article that related to that. And I will tell you one famous story, which you will all sympathize with, in that I wrote that story for Fortune. And when I finished it, it was about 7,000 words. And Fortune didn't like publishing 7,000 words, and they had my friend Carol Loomis explain that to me, knowing that I would pay more attention to her than anybody else, but being stubborn and male, I said, every word is precious, and they can either run it or not. So then they sent an editor, a very nice guy, out to Omaha, and this guy explained to me that it just wasn't right to use that many words. And I said, well, that's fine, but if you don't do it, I'll write it someplace else or something. Very disgusting behavior on my part. And then I sent it. It was beginning to bother me a little. So I sent it to my friend Meg Greenfield. And Meg was a great, great, great editor at the Washington Post. And we were very, very good friends. Wonderful woman. And Meg, who was tough as nails with most writers, but she was kind of nice. She didn't want to really hurt me too much. So I said, well, Meg, what do you think? And she said, well, Warren, she says, you don't have to tell everything you know in this article. And it made the point. And so I write that article shorter, but I'd say more or less the same thing. No, you're better off if you really could have a totally stable unit of a monetary use for the next 100 years. It would be better for business and investors in general. Is we will always have a lot of cash on hand. And when I say cash, I don't mean commercial paper. When 2008 and 2009 financial panic came along, we didn't own anybody's commercial paper. We didn't have money market funds. We have treasury bills. And as I may get into a little later, I'll explain to you why. We believe in having cash, and there have been a few times in history, and will be more times in history where if you don't have it, you don't get to play the next day. I mean, it's just it's like oxygen. It's there all the time, but if it disappears for a few minutes, it's all over. So our cash was down on March 31st because, as you saw, we spent that large sum there in that brief period during the quarter, $40 billion. We've committed to buy Allegheny Corp for something over $11 billion, but we will always have a lot of cash. We don't. Some of our companies have bank lines. I don't know why they have the bank lines. We're better than the banks, and we'll give them the money if they need it. But the local bankers have been calling on them, and they need something to do. Everybody else has bank lines, so it's harmless. But there's no reason for any of our subsidiaries to have bank lines. Berkshire is stronger than the banks that. I didn't hear exactly what I don't know whether that was a banker screaming or. I don't really like to torture. I don't like to torture anybody. I mean, and I'm all for banks, and we'll talk about that a little later. In fact, we might even talk about it right now, just for a minute. Money's kind of an interesting thing. People seem to like to talk to me about it. I mean, they don't ask me how to dance or anything like that, but they do. They ask about money. And so, if we'll put up 20-1, it's a photo of a $20 bill, and it says at the top, Federal Reserve notes. Now, Federal Reserve note, we've done all kinds of things with money in this country. It's amazing, the country only a couple hundred years old, the number of different experiments we've made with banks and everything. But we finally just decided to let the Federal Reserve do the issuing of money. And down in the lower left-hand corner, incidentally, I think Rosie Rios, who signed this note, I think she signed more U.S. currency than any other person in history. So if you see Rosie, you cozy up to her. I mean, this is a woman that has issued a lot of currency. But it says this note is legal tender for all debts, public and private, and that makes it money. You can go into our candy store, and if you offer us enough bushels of wheat, we'll probably give you a box of candy. But money is the only thing that the IRS is going to take from you. You can offer them all kinds of. You can offer them paintings. You can offer them all whatever. But this is what settles debts in the United States. And I thought that you'll hear a lot about various kinds of money. This is the only kind of money you're going to see, in my opinion, throughout your lifetime, or even throughout Charlie's lifetime. I mean, this is it's very interesting because it just says that settle all legal tender for all debts, public and private, and nothing else.